So let's discuss the MCQs in the MTP series 1 for the November 24 attempt, right? So 15 questions over there. Let's begin with the first one, right? So case scenario based MCQs, right? The most appropriate answer to each of the following MCQs by choosing one of the four options. At least not like the IIT, JEE papers where there could be multiple correct options. Here, at least the peace of mind that there is only one correct option. Okay. Rajan, the CEO of a mid-sized company, has received an email requesting him to urgently update his account details due to a supposed security breach. The said email appears to be received from the company bank account, looks official due to the use of bank's logo and branding. Such email also includes a link to the website that resembles the bank's login page. Concerned about the security of the company's finances, Rajan clicks on the link and enters his login credential. Later, the company's IT department detects unauthorized access to the company's financial accounts and identifies that the CEO's credentials were compromised. Identify the type of cyber attack that Mr. Rajan fell victim to. Right? So, is it the smishing? Smishing is regarding the messages, right? So, this is more relating to the mail, right? Then, after that, you have the whaling, spear phishing, and the wishing. Wishing is regarding the voice messages, right? So, that is why swishing and the smishing and the wishing is out of question over there, right? So now we have the whaling and the spear phishing over there, right? So when the mail is sent to executives in the organization, right, like to the big people in the organization, it is called as the whaling. And then when the phishing is the emails, right? When they are targeted to a particular group of individuals in the organization, then that is called as the spear phishing. Right, so here we have the different types of the phishing, wherein you have the spear phishing, whaling, the smishing, and the wishing. Right, so smishing is the text messages, wishing is regarding the phone call or the voice messages. Right, whaling is targeting the social engineering attack, specifically targeting the senior or the C-level executive employees in the organization. And spear phishing is a type of phishing attack that targets specific individuals or organization, typically through malicious email. The goal of spear phishing is to steal the sensitive information, like the bank login details, such as the login credentials, or to infect the target's device with the malware. Right? So based on that, what looks to be the correct answer over here, it is the spear phishing, right? It is the spear phishing. Okay. DFL has invited the tenders for the appointment of statutory auditors as Mrs. Cross Limited. The previous auditor has retired due to the completion of terms of engagement. The tender is exclusively for chartered accountant. STS and Company has submitted its tender quoting the fees for audit engagement considering the size and nature of the business. The contract was awarded to SDS and Company and they were appointed as the auditor for 3 years for the financial year 23-24. Whether SDS and Company will be guilty of professional misconduct under the Chartered Accountants Act 1949. Right, so yes, they will be guilty under 611. 611 is solicitation, so there doesn't seem to be any solicitation over here. No, SDS will not be guilty under 611 of the Chartered Accountants Act. Okay, then SDS will be guilty of professional misconduct under 711, wherein it is advertises as professional attendance. So again, there is no advertisement of professional attendance, and no, SDS and Company will not be held guilty of professional misconduct under 711. Right, so again, there is no relevance of 711 over here. Right, what is it? It's soliciting, right? Solicit client or professional work, and it says, can you apply for work from another? Yes, or can you respond to tender inquiry? Yes, this tender inquiry, if it is open for other professionals, then CA you can respond to any tender inquiry. If it is exclusively for chartered accountant, then the minimum fee should be prescribed in the tender document itself. Right. So in this case, have they quoted the fees for the audit engagement considering the size and nature of the business? Yes. Is it exclusively for the chartered accountants? Yes. So that is why, is there any guilty of professional misconduct? No. SDS will not be held guilty of misconduct under 611 of the first schedule to the Chartered Accountants Act 1949. Okay. Next one. Pihu and Associates are the statutory auditors of BRIC Limited for 23-24. During the audit, CA Aarti, engagement partner, noticed the following. Notices received from the various regulatory authority, payment of various fines and penalties, unusual cash payment, payment to various government employees not supported by any document. So payment. So what you can smell over here is immediately the indications of non-compliance as given in SA 250, correct. The indications of the non-compliance. So CA Arpit should consider the above as indicative of doubt on internal control, doubt on non-compliance, doubt on the accounting system, doubt on the going concern assumption. It is doubt of non-compliance with the laws by BRIC Limited. Okay. Next one, case scenario for MCQ 4 to 8. MNO Limited, incorporated in the financial year 80-81, is a distinguished company specializing in the manufacturing of nickel-based batteries. As one of the oldest manufacturing companies in the sector, MNO Limited operates with 2 manufacturing plants and a comprehensive distribution network that spans across India. Remarkably, MNO Limited was among the first companies to be listed on stock exchange, underscoring its long-standing presence in the market. The company has consistently adhered to the SEBI LODR regulations 2015, ensuring compliance with all the regulatory standards. KP and company were the statutory auditors in the previous year and have resigned from the role of statutory auditor. JKL and company has been appointed as the statutory auditor of MNO Limited in 23-24. In conducting the initial audit engagement, SA 510, JKL and company has simply placed reliance on the closing balances of the preceding period. During the audit, the auditor observed that the company is unable to pay its creditors on time. The company is not able to properly comply with the terms of loan agreement with the bank. Moreover, several key ratios are also adverse, so all going concern issues. Right. In view of the above, the auditor asked the management to provide assessment of the going concern. However, the management did not provide the same. Despite following up, the management did not provide the requested assessment. As a result, the auditor documented the request and the follow-up regarding the going concern assessment in the working paper. Apart from the above, the company has one accounting software for maintaining its books of account, which does not have a feature of edit log, audit trail. Accordingly, auditor reported the said fact of not having of edit log under the other legal reporting requirement under the Companies Act. Apart from the above facts, the several important financial information of MNO Limited during the year 24 is tabulated as below. Paid up capital, debit balance and profit and loss account, turnover, inventory, cash loss, operating loss. Out of total inventory as above, inventory amounting to 12.35 crore is lying with the third party. Okay, based on the above facts, answer the following MCQ. As per the requirement of SA 570, or how would auditor deal in the matter of unwillingness of management to provide for the assessment related to going concern? Right, so going concern assumption is appropriate, but management is unwilling to do the assessment. You have to consider the implications on the audit report. It may lead to qualified or disclaimer of opinion. Auditor should report such matter as a key audit matter. No. Auditor should properly document evidence relating to asking management and its subsequent follow-up with the management for assessment of going concern and accordingly express unmodified opinion. No. Auditor should report such matter as emphasis of matter. No. Auditor should see the express a modified opinion in his audit report. Right, so no CAM, no EOM, no documentation, straight away you go for a modification. As per SA 501, what is the correct audit procedure to be followed regarding the existence of condition of inventory, where an inventory valuing to 12.35 crore is lying with the third party? Auditor should rely on the management explanation. Auditor should request confirmation from the third party as to the quantity and the condition of inventory held with them, or perform inspection or other audit procedures appropriate exactly as given in SA 501. Right? You go and you obtain the confirmation, or you perform the inspection or the other audit procedure. Right. State the amount required to be, or let me read the other options. Auditor should verify the inventory lying with third party. Auditor should take written representations only from the management regarding the inventory lying with the third party. No. Auditor should obtain the confirmation. If not, do the inspection or perform the other audit procedure. Right. State the amount required to be reported by the auditor of MNL Limited under clause 17 of the CARO on account of the losses during the year under consideration. So clause 17, whether the company has incurred any cash losses in the financial year and in the immediately preceding financial year. So what is the amount of the cash loss over here? 2.95 crore. Okay, according to SA 510, which of the following audit procedure can be implemented by JKL and company to obtain evidence on the opening balance about whether it contains any material misstatement that could affect the financial statements of the current period? Check whether closing balances of the preceding period have they been brought to the current period? Yes. Perform audit procedures to obtain evidence regarding opening balances? Yes. Check whether the accounting policies have they been consistently applied? Yes. So all procedure 1, 2 and 3. Right. So basically they've given us all the 3 procedures as discussed in SA 510. Okay. Coming to case scenario 2, MCQ 8 to 10. AFG Limited, incorporated in 84-85, has distinguished itself as one of the most rapidly growing NBFC, having principal business of granting loans. Its head office is situated in Pune, a city renowned for its dynamic financial and industrial sectors. Remarkably, EFG Limited holds the notable achievement of being among the first NBFC to be listed on the stock exchange, which underscores its long-standing and influential presence in the financial market. Over the years, the company has demonstrated an unwavering commitment to regulatory compliance by consistently adhering to the SEBI LODR. This steadfast adherence ensures operations aligned with the rigorous standards set by the regulatory authority, thereby reinforcing its credibility and creditworthiness among investors and stakeholders. SDS and company thoroughly obtained the knowledge and background of the company, including the understanding of the legal regulatory requirement applicable to the company. During the audit of the financial statements, the auditor observed that company has violated one of the prudential guidelines of RBI as applicable to the company relating to the acceptance of public deposit. Since the company was a non-deposit taking, and in one case during the year under consideration, the company had accepted the public deposit. So it's a non-deposit accepting NBFC, still it has accepted a deposit. In this regard, the management has also provided a detailed note in the financial statements and subsequently also repaid the said deposit in the next financial year. Considering the said note, the auditor feels that the matter is important and requires the attention of the users of the financial statement. Auditors of EFG Limited sent confirmation request to 14 debtors to whom loan has been granted to confirm the year-end balance as per 505. The said requests were designed in such a way that debtors will directly respond to the auditor only when they disagree with the same. So that's a negative confirmation request. Okay, considering the nature of the business, which reporting clauses of CARO would be applicable from below? Whether the company has conducted any non-banking financial or any housing finance activity without holding a certificate of registration from the RBI, right? So that is your clause 16B of the CARO. Okay, in respect of loans and advances in the nature of loans, whether the schedule of repayment of principal and payment of interest has been stipulated, and whether the receipts or repayments or receipts are regular, right? So that comes under clause 3C of the CARO. Whether the company is required to be registered under section 45 IA of the RBI Act, if yes, whether the registration has been obtained, right? So that comes under 16A of the CARO. Whether the company has granted any LIGS, loans, investments, guarantee security to another entity. Right, so first 3 points, whether it has conducted any NBF HFA, yes. Then the repayment schedule of principal and interest, yes. Is it required to be registered? Yes, but there is no question of whether it has granted any loans, guarantee or security. So that is why only 1, 2 and 3. Right, that is why only 1, 2 and 3. So B is the correct option. What is the auditor's responsibility when the audit of EFG Limited for the previous year has not been conducted by the current auditor, that is SDS and company? The auditor needs to report such matters in the other matter paragraph in the main audit report. Yes. Auditor needs to report such matter in the emphasis of matter. No. Auditor will be responsible for obtaining sufficient appropriate evidence that the opening balance does not contain any misstatement. Yes. So it is both 1 and 3. Okay, it comes under the emphasis of matter. It doesn't come under the, it comes under the other matter. It does not come under the emphasis of matter paragraph. In the given case, what is the reporting requirement in relation to SA 250 on the part of the auditor with reference to the violating of the guidelines by the company with reference to the acceptance of public deposit? Auditor is required to report such matter in the main audit report under the other matter paragraph section only. Auditor is required to report such matters in the main audit report under the emphasis of matter paragraph only. Apart from reporting the matter under the emphasis of matter, the auditor is also required to report to RBI. Apart from reporting the matter under other matter, the auditor is also required to report the matter to the RBI, right? So here obviously it is not the other matter. So emphasis of matter, and here because there is the violation, right? The company is not allowed to accept deposits, but still it has accepted deposits. So that means there is an observation which is adverse. It is also required to be reported to the RBI, right? NBFC acceptance of public deposit directions. Okay. Right, case scenario 3, MCQ 11 to 15, mainly related to ethics. Okay, Ram and Lakshman are close friends and are into practice as sole proprietors. Both decided to expand their focus on taking up more assignments in the field of GST. On back of the same, they both decided to conduct a joint training session for their clients on GST and decided to share the total fees collected thereof. Like there is a recent decision of the Ethical Standard Board which says that can the CA conduct the joint training session for GST and also share the fees in relation to the same? Yes. Well, it is permissible for 2 or more chartered accountants in practice collectively to have the joint training session, right, for their clients on GST and share the fees collected from the clients thereof, right? So that is one. They invited another CA from their professional circle to join the initiative. However, the person declined the same, informing that this act was against the ethics and will lead to disciplinary action from ICAI. The partner of AK and Associates is a close friend of CA Ram. The firm was involved in the audit of a listed company which was required to submit the BRSR. The company being audited was into thermal energy production business in India. They had submitted details about the total emission from its production outlets during the year and a detailed energy consumption plan which it had devised for the upcoming years. Since CA Ram had undergone a course on sustainability reporting, he was approached for getting advice on what needs to be reported in the BRSR. As a gesture for helping the firm, the partner of the firm suggested CA Ram's name to the post of becoming a member in the board of management of the KYC Cooperative Bank, a primary urban cooperative bank and a client of AK and Associates. Upon hearing the same, CA Lakshman requested Ram not to take up the post as it would lead to professional misconduct. Right. So again, what does it say? Primary cooperative bank is. So, Ethical Standard Board noted that the position of a member on the board of management in the primary urban cooperative bank and role attached to that, yes, is similar to that of a director simpliciter, where there is no involvement of the member in the day-to-day functioning and not signatory and only setting fees for the services are rendered. Right? So, is it again allowed? Yes, it would be allowed. Okay. CA Ram was acting as the internal auditor of PL Technology Private Limited. Yes, the company decided to raise more funds for expanding its business across the country by including new age technological services such as AI. Ram was observing the business model and the way in which the company was operating for quite some time, and he was keen in investing in the company. As a result, he decided to invest in the company shares and ended up acquiring 9.75% of the shares. Total face values of the shares acquired was 4.75 lakh of the company during the year. Lakshman got to know this information and he immediately urged Ram to resign from being the internal auditor of PL Technology Private Limited for the reason that internal auditor cannot hold the shares of the company and it will lead to professional misconduct and also failure to comply with the provisions of the Companies Act. So they've written Companies Act 1949. Error. Okay. However, CA Ram did not accept the argument of Lakshan and he said nothing will happen because of him acquiring the 9.75% shares in the company and continue to act as an internal auditor. Why? Because internal auditor, there is no restriction on the holding of the shares. CA Lakshman was the statutory auditor of GH Finance Private Limited and NBFC headquartered in India. The company's treasury department had undergone changes in the recent past and the current set of team members did not have much experience in handling the treasury function. Due to this situation, the company reached out to the auditor CA Lakshman, who was also into equity research advisor apart from CA practice, to support the company and the members of the treasury department for a brief period by giving investment advisory services to ensure the efficient utilization and the management of the funds of the company. Right, so can a CA act as an equity research advisor? Yes, but can he publish a retail report? No. Right, a chartered accountant in practice may be an equity research advisor, but he cannot publish a retail report as it would amount to the other business or the occupation. Okay. Right. Before committing anything on the offer, CA Lakshman wanted to consult with CA Ram as to whether the service requested by the NBFC can be performed by him. Okay. Question number 11. Whether the act of conducting the joint training session on GST by CA Ram and Lakshman and sharing of the fee collected leads to professional misconduct under the Chartered Accountants Act, whether it leads to professional misconduct, yes, 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 and at least the fourth one should be no. And it says, as per the recent decisions of the Ethical Standard Board, it is permissible for two or more members in practice collectively to have the joint training session for their clients on GST and share the fees collected from the clients thereof. Right? I just showed you that particular point. Okay. With regard to the BRSR reporting on the data of the total emission and the future energy consumption plans of the year of the company, how do you treat them? The details of the emission part of the company forms part of the essential indicator and needs to be mandatorily disclosed. However, the plans for future energy consumption is only a leadership indicator and it is considered as an optional disclosure. Then it says both are essential indicators, both are leadership indicators, and vice versa. Right, so which is the correct one? The first one. What does it say? The details of emission will form part of the essential indicators, whereas the future energy consumption, that will be the leadership indicator. Right, so mandatory and the voluntary disclosure. The futuristic plan which the company has for its energy consumption can be categorized under which principle of the National Guidelines of Responsible Business Conduct? Is it talking about ETA, the ethics, transparency, accountability, protection, restoration of the environment, respect for stakeholders' interest and responsiveness, or influence on public and regulatory policy? So obviously it's energy consumption, so it's related to the environment. So protection and restoration of the environment. Okay. By accepting the offer to become a member of the board of management of the KYC cooperative bank, do you think CA Ram would be guilty of professional misconduct? Yes. Okay. Would he be guilty of professional misconduct? Yes. Then it is permissible for a CA in practice to become a member of the board of management in a primary rural cooperative bank, urban cooperative bank. Oh my God. Look at the minute observations over there. Right, so CA Ram would not be of professional misconduct if he accepts the offer, urban cooperative bank, and yes, CA Ram would be guilty of professional misconduct under part 3 of the second schedule. No, that is imprisonment for more than 6 months. Okay, right, so what does it say? It is permissible, right? It is permissible. Okay, and the last one. In the given case, it is mentioned that CA Lakshman is a practicing CA and is also engaged as an equity research advisor. Do you think CA Lakshman will be guilty of misconduct? Do you think will he be guilty? You don't think he will be guilty. So you have to look at the drafting of the question. Then it says, yes, he will be guilty. Yes, he will be guilty. No. In practice, a CA in practice may be an equity research advisor, but he cannot publish the retail report as that would amount to other business or occupation. Thus, if CA Lakshman doesn't publish any report, he will not be held guilty of professional misconduct. Right, so that is our discussion for the MCQ in the MTP 1 for the November 24th attempt. Right, thank you for your patience listening.